Hello les amis. That means hello people, right? Hello friends. So next week we have something that's gonna cause the market to be on hedge. I'm talking about JP, Jerome Powell, the Fed chairman, the guy with the money machine gun, putting money, injecting money into the markets in 2020. Yeah, that guy. Every time he speaks, people are like, oh, I don't know. I don't know what he's going to talk about because this might be a reason to see the markets pulling back big, because now that Omicron is out of the sight, because boosters, vaccines, everything is now working efficiently against Omicron. So people are going to shift back the risk onto inflation. And inflation is one of the biggest risks investors see for 2022. All right. So the Fed used to think it was transitory, but he said, I was wrong. It's not going to be transitory. And the data we had back on Friday, the CPI data shows that, hey, it's not going back down anytime soon. And this is pretty normal. But it's not normal for markets, especially some of the pockets of the stock market. And that's why I think we might see AMC pulling down next week, even further down to what we are currently seeing. It's sitting at 27. So I wouldn't be surprised if, next week, either it stays flat or it goes back down to maybe below the 20s. I know it kind of seems a little bit doomy, scary, but it's not FUD, all right? Because even if it drops to $5, this has nothing to change. It doesn't change any damn thing to the whole short squeeze you and I are waiting here for, all right? Because the reality is there are so many catalysts out there pushing and that are going to push the short sellers in a corner where they will have no choice but to make you and I rich. All right. So we already talked about many of these, but inflation is one of them. And if next week Jerome Powell on his speak, I think it's going to be the bi-weekly meeting of the Fed, and he says inflation, and because of that, we're going to start tapering, meaning we're going to remove the money, the stimulus money we've been injecting into the economy sooner rather than later. Let's just say, we're going to start that next week. People are going to go crazy, especially big hedge funds that are loving the tech companies. All right. These stocks that went and outperformed, had the major gains in 2020. All right. So as an example, you can see that, hedge funds Athana will return client cash in move to family office. This is a hedge fund that has struggled a lot, and was still losing losing a ton of money this year in 2020. And as a result, they had to close, and they are not the only one. Athana has struggled since the start of the COVID-19 pandemic. The Athana Master Fund was among the biggest losers in the March 2020 sell-off in the global markets, declining 20%. Wow. While it recovered some of the losses, it ended the year down 3.6%. According to an investor document seen by Bloomberg, the fund dropped 13% this year through May and is still in the red for the year. How can you be in the red in 2020? By contrast, it gained 88% in 2018 and almost 22% in 2019, the document shows. Several hedge funds, including Field Street Capital Management and Sloan Robinson, have recently returned external capital. More than 350 hedge funds have shut this year, according to data compiled by Hedge Fund Research. Let me pause for a second here. Faisons une pause, les gars. How can you be down in 2021 when that was the most bull run, all right, the most aggressive and quickest bull run the market ever saw? If you wasn't short selling the market, meaning you will have to lose when the market goes up. All right. So no wonder, since this market has continued to go up, you are still losing money, even when a monkey could have thrown a banana in the market and make 10% the next day. Do you see what I'm seeing here? Do you see what I'm talking about? They want to show you back to AMC. They want to give you the impression that things are going fine for themselves. But the reality is this price action, this chart that we see, it's not the real price. And we already know it. But sometimes because we are so used every single day, every single hour, every single minute to check our account, to check the share price, and we are not helping ourselves by doing so, because it is stressful, all right? And it doesn't give you the bigger picture. And the bigger picture is look around, look on the markets, look at what is happening, look at what is coming, and we'll actually push them, because that's what we want to see. That was, we want to have that situation where they are cornered, all right? And they start closing positions because they have no way around it. They have no other choice. And it's going to start with such little hedge funds, not the big ones, not the Simplex Trading or the Citadel or the Susquehanna. No, like the 8,000 shares shorts here in AMC. All right, because when those ones starts to fall, that's when you can have the domino effect to actually cause the others to push up the price by covering, all right? Because it's going to be, I mean, the buying push is going to be too much for them, all right? But let me end this video with this. The tricky part is, even if this week, let's just say it goes down to 20 and you have an average cost around 10. So you're still up, double, 100%? Yeah, 100%. And you might tell yourself, well, this is already a lot of money. Let me just, sell, maybe with the intent of buying back. The thing is, you cannot time the market. Nobody does. And AMC is a ticking bomb. I mean, it really is. It's a ticking bomb. Ça peut exploser à tout moment. This can go off, can blow up every single day. You can wake up tomorrow, literally wake up tomorrow and see this trading at 500 a share pre-market if they start covering, all right? I'm not saying it's going to be the case, but I'm saying it has the potential to do something similar, do something like that, because of the amount of short seller pressure and short shares in this play. All right. So if you telling yourself, hey, maybe can I sell now? Cash in the money that I'm making so far is already a whole lot of money. The thing is, Paul, you don't know. You don't know what can happen tomorrow, especially with AMC. The volatility is so big in this that if you sell now, tomorrow it can run back up to $50 or even 100, or maybe next week, and you will sell. Well, you will never recover from this psychologically, because this is something we have to also take into consideration. All right, look, you haven't sold at if you haven't sold at 72, all right, why will you sell at 5? Why will you sell at 20? Knowing what is at stake here, knowing what is coming here. So that's why me personally, I have a pretty low average cost per share, but I don't think that the money I have as profit now is enough for me to actually close my position in AMC, even with the price dropping. But hey, that is just me, all right? You do you. You want to buy, you want to sell. That's your money, that's your loss, that's your gain. But also know how to deal with it, all right? With the consequences of each act, because it's your money.